right, unfortunately, with these type of market conditions, which we can analyze what these market conditions are, is that we're not going anywhere right now. And two factors that kind of tell us that. One, you can see the obvious direction is sideways. And two, you can see the nature of the market. Down, up, down, up, down. And even though the movements aren't very big, it pretty much tells us not only are we moving sideways, but there's really no definite direction in the market, because one day they'll take it up, the next day they take it down. Now, what's more indicative, though, is over here on the NASDAQ, you can see that the uptrend remains in progress, and even today when they took it down for a while, I had to get something to drink here. Even though they took it down for a while during the day, they still closed it not only back up above the T-line, but above where they opened it. So pretty much tells us there's really no dramatic force one way or the other. We can see the same scenario in the transportation index. Oh, my voice is just whacking out here. I might have to get to the pertinent points here real quick. Crude oil, as you can see, is not worth trading. Going sideways, no major price move. But what it is telling us is price move is locked in here between $55 and $52 a share. Means there's not a whole lot going on as far as any big major moves in crude oil, obviously, which means now they can start going back to assessing each chart or each company based on its own merits. So as we can see in Whiting, nothing major going on there. Now, on the other hand, and this was the kind of the point of the afternoon newsletter, was we can see what's happening. I don't know what's happening here. Putting a strain on my voice somehow. ECAG7. You can see which way the gold prices are moving, which also tells us the gold stocks. Whoops. What's happening here? Kind of mixed J-Nug with Nugget. Today I mentioned to the options room that I was buying the Nugget February 11 calls for $1.25. I think they closed at $1.41. But again, based on what we can see actually happening, one came up through the 50, supported on the 50, supported on the T-line, doing a little slow curve. Up here is potentially the next target. Now, why is it still picking up? Because as long as gold keeps moving gold is still, what am I hitting here? I'm just hitting the wrong charts. As long as gold keeps moving up, it has the prospect of gold moving all the way up here. So if that does that, usually you're going to see the gold stocks. Gold Rand was another one that has had a nice slow curve, potentially moving up here. So it's not one of the aspects that we kind of teach in trying to control your emotions is to observe the obvious. Which sector is obviously having the most strength coming into it? Well, as we can see, the golds have a lot of setups. So this is IAG. Pretty simple. If it breaks out through this level, we know we've got a wave 3 in progress, and we can pretty much calculate what the rate of return will be on that next price move. AU, same scenario. Once it came out of the scoop pattern, which is basically what the whole sector is doing. You stay long as it stays above the T-line. And AG over in the silver area, kind of the same scenario. As long as it stays above the T-line, if it breaks through this level, we know pretty much we're probably heading up for this the 200. So stronger gold implies stock pullback and fear of trade, or can they both go up together? Terry, the one thing that I have discovered through the years is whatever you think the correlation is, or what everybody professes the correlation is, you don't have to sit here and say, all right, that's what usually happens, or that's what's going to happen. We can see what the charts are telling us. So I kind of illustrate that in the same manner that at some points in time when everybody's saying, oh, crude oil prices are going higher, that's going to knock down the stock market. Then there's other times where they say crude oil is going higher, that's going to help the market because there's a whole different analysis of what is affecting the other. If crude oil is going up, that must mean the economy is getting better, buy stocks. On the other hand, there are times when crude oil prices are going up, that's going to make it worse for consumers, time to sell stocks. So that's the one thing I discovered is let the charts tell you what's going on, because investor sentiment changes dramatically from one time frame to another. So don't just depend on the old standard. Oh, Marcus, I don't know. And I probably have been out of the loop here for the last week or so because of the great kidney stones. I'll check on that. I don't think so. I think we're still scheduled for starting the 6-hour, 8-hour course starting February 8th. You ever look at the 1 hour, 15-minute chart when watching a stock? I see a lot of confusion when I do. It's all based on the time frame that you're trading. If you're trading relatively short term, you might use a 10-minute, 15-minute, 1 hour combination. If you're a swing trader, you're using the daily. If you're a swing trader and your daily charts are getting way overbought or way oversold, you flip to your 10-minute chart. So it's the appropriate time frame for what you're trading. JS can hold all your individual stock comments until I get done, which might be very soon tonight. This started happening this afternoon when I was talking that my throat seemed to be tightening up. So this is what we're looking for. Notice what happened in CENX when it did a doji gap up. I told you that's going to be a very new, strong, dynamic chart. So whenever we see that new strength breaking out like we saw in GLBS, tells you there's a new dynamic going on in that stock/sector. This is why we kind of pound into everybody's head that if you can see a wedge, you can see a pattern breakout, that's just going to put you in a situation where the probabilities are pretty strong that things are building up, that you're in the right position at the right time. This one should be over in the gold stocks, but same scenario. You can see how they came up through the 50, did the bobble. Now you've got the price move. So, oh yes, the early warnings one was supposed to have been on the 17th. We were supposed to reschedule it. I'll have to find out when we've rescheduled it. It may be, what is today? I'll have to find out when we rescheduled it. Was it on the 23rd, which would have been today? I'll find out from Abe. It might be in the next couple of nights. And here's another one that should have been over in the mining stocks, the Hecla mining. Same scenario. If we can analyze all the truisms that occur and see it better with candlestick charts, for example, what happens when we first hit a resistance level? We usually pull back. What happens when they go through a resistance level? They'll pull back and see if that's going to act as support. What happens when it acts as support? It creates another pattern, a J-hook pattern. So something that you can look at to say, all right, there's kind of a trend channel down through here and it just broke out. Yeah, that gives you much better probabilities that you're now going to be in a situation where the probabilities are greatly in your favor. Now, the reason I was showing so many gold stocks is if you can see that a lot of the gold stocks are heading up and doing nice patterns, I mean, that's just simple logic. That means they're buying those gold stocks. We just have the capabilities of seeing much more clearly that they're buying the gold stocks, and we can see which patterns are being created. So, again, there's nothing real dynamic or secretive in candlestick analysis. It's just, why can't I pull that one up? It's just pulling up or visually being able to analyze what's happening in a chart and knowing what parameters that we need to see, such as staying above the T line, J-hook pattern, this is CDE, Freeport Macroman, slow curve, and where is it about ready to break out through this level. So if you know what the pattern is telling you and what to look for next, that if this opened positive tomorrow, we'd be a buyer because it'd be doing kind of a doji sandwich breakout. There's that little breaking of through the resistance level, and notice what happened when they came back to the resistance level. We can see the strong morning star signal with the doji gap up on the back end of it. It tells us we've got a pretty strong possibility we're heading higher. Terry, the 50-day moving average is the blue line. That's a simple. The 200 is the red line. Simple moving average. The gray line is the 20-day simple moving average. And very basic reason why we have those on our charts. Because every major money manager around the world uses those moving averages to make their decisions about their portfolio. The advantage we have as candlestick investors is because a candlestick signal is the cumulative knowledge of everybody buying and selling during a particular time frame. We can see exactly what's happening at those support and resistance levels. We can be buying immediately. I always go back to, I get a lot of people asking, well, how many days does it take for your reversal signals to tell you there's been a reversal? And the answer is 0. If you see a buy signal and it confirms, you're buying right away. That's what the signal is telling us. Bob, I use everything that would tell me what everybody else is watching, whether it's Bollinger Bands, Fibonacci numbers, trend lines, moving averages, anything that everybody else uses. The advantage we have is we can throw them on the charts and we can see exactly what the investor sentiment is at those levels. So it all boils down to that my number one criteria for when to buy and sell is based upon the signals. Everything else now becomes a confirming indicator or a confirming indicator of why did it reverse here. In this case, if we see the moving average, was there Bollinger Bands? Was there Fibonacci numbers also showing that people are buying at that level? So everything else becomes added confirmation of why that is a reversal. Let's see. Somebody showed us Cube today, which also had a nice reversal. Where do you think the next likely target is? Right at the top of this channel, which means they could be taking it right back up to the 200-day moving average. Here's that fry pan bottom with a J hook. On this one, Thomas, on the last one. You can see that it's kind of a fry pan bottom. Now it's called a cup and handle or a J hook, whatever. Doesn't matter what you call it. You can see what's happening. And I say you can see what's happening if you just assume that prices do not go straight up or straight down. They move in waves. That's how you analyze things. So if I'm looking at a strong reversal right off the 50, I can see you're coming up to a resistance level. This is West Rock. I've got a wave 1, wave 2. Now I can potentially calculate what wave 3 is going to be. It's going to be the same as wave 1. So I improve my probabilities tremendously by knowing if they open positive tomorrow, breaking out through this part of the this resistance level. I've got a good probability. Now we're in wave 3. Momo, observe the obvious. Notice when they consolidated, it was not decisive one way or the other. And what happened when the T-line caught up? They told you decisively which way they're still taking this trend. ERVN. So if you're observing the obvious, you can see they pulled back. Mid sell signals the first time they hit a resistance level. Pulled back, but notice your pullback very indecisively. And how can we tell it's indecisive? We can see what type of formations are being created every day. Doji type days, telling you the bulls and the bears are indecisive. Then what happens? They take it back up. So we're sitting right here on the at the resistance level. So what's that tell us? Well, it tells us we probably have a bobble pattern setting up. If that's the case, it opens positive and starts trading positive, we can be buying immediately because we know what should be happening out of a bobble pattern. They came up, hit the resistance level, saw a sell signal, took profits. Now we can be buying back knowing that they aren't taking it back in this direction. They're doing a J-hook type pattern ready to break out. Is the last signal this one right here? No, this is one I just call a gap up. Remember, a kicker signal is very decisive. It has a big down day, and then they gap it up above the open of that big down day and go with a big up day. So your bread and butter is learning what the patterns are. We've seen scoop patterns. It tells us we have a slingshot effect. So the more pieces of analysis that we can put in based upon what happens in investor sentiment, the higher the probability we're in a good trade. So if we're buying right here because of the scoop pattern, notice what happened up here. Got a little bit doubtful that maybe they're not going through this resistance level. But Friday, notice what happened. They opened it, gapped it up above the previous day's open. So this is what we call a trend kicker signal. Notice it opened here and closed here. Then they gapped it up and moved in this direction. That's kind of your trend kicker. This is a kicker signal, and it's in the trend. And what's that tell us? It tells us there's still a lot of strength in this uptrend. And if they did that kicker signal right here, what's that tell us about our resistance level? There is no more resistance level. There's still a lot more upside. So this is just merely putting in common sense candlestick analysis into analyzing our trend, not only showing us when it's time to get into a position because of a candlestick reversal, but how long to stay in that position, as long as you can analyze what's going on in the pattern and or the overall trend itself. Another one that came right up to the resistance level, right about where it stopped before. Well, this is TGH. fact that they gapped it up through the resistance level and the 200 told you there's still a lot more upside. And again, here's, depending on your nature as far as an investor, where do we want to buy? We want to buy when it's in the oversold area and it's pulled back. What are all the elements that we could put into this application or this signal right here? Number one, a Morningstar signal. Number two, closed above the 50 as well as above the T line. Closed above the 50, which told us the 50 is acting as support. Number three, you can see there's kind of a trend channel here. So where do you think your next likely target is? You don't have to be a rocket scientist to figure out that everybody else can see that this is the top of the channel. So that's your likely target. Resistance at 20. The 20, as you can see, was not a factor in this move. And the 20 usually is not a factor. Now, it's a mild factor, but my criteria would still be, if this opens positive tomorrow, I'd be a buyer with the anticipation that here's my next target. Now, I can calculate that it may take 2-3 weeks to do that. It might be more beneficial to put on a weekly spread, like maybe buying the February, I think it's the week of the 11th. See if there's a good spread, maybe selling the 29s and buying the 26s. See if that would be worthwhile. So at least I can analyze what my target might be, what my direction is, and kind of calculate what my magnitude of movement will be. Now you've got much more vital information for deciding whether you're putting a spread on as far as an option trade is much more beneficial. OELD, you can see the kind of the rounding bottom. You can see it supported on the 50. And you can see it's kind of breaking out. So another one that if it traded positive tomorrow, you might have another 12-point move and it taking you up into, let's say, the $70 area. So again, you can calculate based upon wave 1, wave 2, and now breaking out through this downtrending channel and the 200, because there's probably a new dynamic in this stock. So another one that we did that kind of scenario is earlier on Amazon. You can see there was a wedge from, say they can't see. See, there's kind of a wedge formation here. So once it broke out, what did it do on the breakout? Came up through the 50, did a little best friend signal, stayed above the T line, and broke out through the downward trend channel. It told us there's a new dynamic. Now look what's happening. You can identify what that pattern is. So probably tomorrow, I'll be trying to buy some of these calls. Now, they're expensive. I think I forget which February calls were at $8.20. They're trading for $25 an option. So obviously, I'm not going to buy a whole lot. But as the old saying goes, what's heavier, a pound of lead or a pound of feathers? Doesn't matter how you buy them. If it goes up 100%, doesn't matter whether it's gone from 3 to 6 or from 25 to 50. Isn't the upper shadow somewhat puzzling, Gordon? I don't know which one that was. So looking at some of these other ones, Apple, just not very intriguing. If you own it, you stay long as it stays above the T line. Wave 1, wave 2, now you're a good distance away into wave 3. Tesla. ever since it did the double bottom with a morning star signal followed by a doji sandwich, remember that's your McMuffin, a morning star signal followed by a doji sandwich, or your morning sandwich is your McMuffin, and just read what this did very clearly. They gapped up through the resistance level. They pulled back to see if the 200, which was a potential resistance level, is now going to act as a support level, which we could see that it did. So this told us wave 1, wave 3. Wave 3 is going to be about the same magnitude as wave 1. Hermes Pharma. Hermes Pharma. Hermes Pharma. What was the symbol? Okay. Chris, I try to keep my option trading very simple. If I've got 3 weeks or more going into expiration, I'll probably buy calls or puts outright. If I've got somewhere between 1 week and 3 weeks to expiration, I'll probably be putting on a debit spread. And we do our sessions showing all the benefits of doing a spread versus just buying the calls outright. And then if it's in that final week, usually Monday or Tuesday, I will go ahead and do a credit spread because they aren't very profitable, but the probabilities of them making money are extremely high. What did I just do? Just, let's see, Netflix. Netflix, again, this was kind of a situation where whenever you see that gap up in an overbought area, start watching. Now, today, if I'd been long, I would have closed out the position. Because we had a gap up. This is your message. And what do we want to see from the message? That the selling has stopped. Well, the selling hasn't stopped, so where is it probably taking us? Taking us back down to the T-line. Doesn't mean we're not in an uptrend, or we're not going to be in a very prolific uptrend. Now, as far as having a few short positions in the portfolio, that one you probably want to go short. There's your bearish engulfing after a hanging man, failing at the 50. So if this is wave 1, this is wave 2, now you've got a bearish doji sandwich. We expect wave 3 to be the same magnitude, heading back down, maybe down to these lows. And Tier 1 is a good example of a sector or industry. The retailers were getting hit. So when we started shorting this one, where was our next likely target if it broke this support level? Back down to the 50. So we stay short. Now, what happens when it gets to the 50? Again, we've got the graphic advantage of seeing exactly what's happening when it hits a major support level. The stochastics in the oversold area. Now, if it slumps right through, we stay short. If it bounces back up and does another potential signal, we get ready to cover our short positions. And being short, obviously, in the retail sector, it's all based on, if you see a lot of stocks, like Macy's, that has never been able to get back up above the T-line. Dillard's, kind of the same scenario. So if you just put everything in alignment, that if you can see which direction the market is moving or not moving in a direction, you can see which sectors are acting the most bullish or the most bearish, and then you can go to those elements of that, or the stocks that make up that sector, and see which ones are having the most bullish charts in that bullish sector or the most bearish charts in that bearish sector. So basically you're putting all the stars in alignment. Again, this is all kind of aspects that we will be walking through slowly when we do the emotions training, and mainly so that we get people more oriented toward All right, let's take a look at what is actually happening in the market versus what our emotions tell us we should be doing. And once we just start using the common sense analysis, we're to see stocks in the same sector. Paul, I'm going to try this here real quick. This is just over here on TCNet. As we can see, we can analyze what's going on in a stock. But up here, I can go to all the market groups. And as you can see, I've already analyzed this or updated everything to where I've found which stocks or which sectors had the biggest percent price move today. As you can see, it was silver. Next one was air services. Next was gold, metals and mining, copper. So it was mostly that area. Now let's say, for example, I was already pretty strong in some of these sectors, and I was closed out a couple good trades and needed to move someplace else. Well, this sector don't have anything in. So I flip over here and say, all right, this one's starting back up. What ones? And I can go up here and click on this and say change to, I think it's sub-industry. And you can see it's showing me which stocks are in that sector. So I can start looking through and say, all right, which ones of these do I want to go after? Now, as you can see also, there's not a whole heck of a lot of them. Maybe I hit the wrong. Here's more of them. Now, here's more of them, but some of them don't fit into my criteria. Remember, my my criteria is I want to see stocks that average 200,000 shares a day. So as I go down through some of this, I might have some good sector stocks. I mean, this one looks all right, J-hook pattern, and my volume's all right. Home Depot, big volume. But something like this, it might have a good-looking chart. Only has 53,000, so I have to go through these a lot quicker to find not only the stocks that are acting right, but are in that I would consider in my universe. Yeah, so what I've done is I've gone up here that says the Morningstar Industry Groups. That tells me which sectors are the best. Today it was silver and mining. Which one acted the best in silver and mining? You know, if I go here, I can see this little stock, XRA, had a big percent move, up 19%. So I can go through and find which stocks look most attractive for what I'm looking for. So SPGL, we looked at earlier. More than likely, that's going to be on the recommended list because it's got big volume, trading above our $5 a share, and it's doing the little bobble breakout. So using these type of, let's see, industry looks the same idea like shaking analytics. Yes. And the sectors aren't anything more than putting those, obviously all the stocks in that area in the one area. Did you ever hear of a desktop program called Candlestick where you can input symbols and it spits out all the patterns? John, I haven't, but I've never needed to. So anyways, that's how you can kind of put the probabilities in your favor, is which sectors are acting the strongest. Which way do we think number one, which way do we think the market's moving? Number two, which sectors are acting the strongest? And three, which have the best stock charts in that sector? Candlestick is a product of Steve Nissan. All right. I haven't heard his name in a while. Obviously, he did not like me when I started showing different concepts of how to use candlestick signals much better. Oh, Mobley. Mobley is another one that. So we've got quite a few, and this. Let's see, I'll put this over here to get back to a chart so we can see. Oh, no. So when the market is moving pretty much sideways, you really don't know what's happening out there. Fortunately, with let's see, I'm trying to get to the ones that are just kind of like paw, for example. The market's not moving. At least we can see this one staying and coming out of this fry pan bottom J-hook pattern. And what's the criteria that keeps us in this one? The fact that it's never closed back below the T line. Oh, there was more. HBM. Really could never close back below the T line. If you're long, you stay long. If you're looking to buy, look to buy if it breaks out through this level, because that tells me wave 3 will now be in progress. Dean, what I discovered about Steve's stuff is it was too detailed, telling you what to look for as far as the signals versus what to look for as far as the signals that are going to produce good profits for you. The T line, yes, is the black line, the 8 exponential moving average. So I always, people always ask me when I think of Steve Nissan's work. I always explain it this way. I don't like to make an opinion about somebody else's work. It's like I'd rather walk a mile in their shoes before doing that for 2 reasons. One, if I say something to piss them off, I've got a mile head start. And secondly, I've still got their shoes. Dean, I think a lot of people are in here right now, or quite a few people are, in at least for the free week. So, yeah, I read, when I had started using candlesticks, I read Steve's information, but it was just too detailed, and it didn't tell me how to make money. So, I kind of put it more in a concise manner. All right. Okay, Jim, let's go ahead and do the double line. If you'll keep your request down to 1, I don't think my throat is going to last very long tonight, so I'll try to do as many as possible. Mux, just stay long. And I'd be a buyer of this one on positive trading tomorrow. ASM, you can be buying this one on positive trading tomorrow. You can see kind of the little fry pan and the breakout. At least you know your next target's probably up here to fill this gap. IBM, nothing wildly exciting. There never is with IBM. If you like it, you stay long. I wouldn't be trading it. It's just too much of an institutional trader. And Priceline, this one you can get ready. You can see it's still kind of in a trend channel. So you did a left-right combo today after the after the hammer signal. So you can get ready to buy it. Don, I read that. Yes. Yeah, Don sent me an email on things that probably should be cut from the budget. give our budget in the U.S. government is something like packing 2 pounds of doo-doo in a 1 pound bag. But the more they keep stuffing in, the less they even think about emptying any out. Bristol Myers, if you were short, did a bullish barometer today in the oversold area, so I would put a buy stop. If I was short, I'd put a buy stop just above today's high. It shouldn't come back up through that level. If it does, more than likely they're going to bounce it back up to the T line. SRCL just closed up above the T line. So it has to open positive and trade positive tomorrow to stay in it. If it opens lower, again, you don't have a very big percent price move on it. Just not a very, doesn't have a big percent move potential to it. Facebook, stay long as it stays above the T line. AMAT, just stay long. Now, if it opened lower tomorrow, I'd probably close out the position and then put my buy stop right up here, whatever the highs were today, 34.19. I'd probably put a buy stop at 34.25, knowing that if it came up through there, it didn't go down through the T line. For some reason, tech, it's not coming up over here. They must not have changed it yet. Yeah, they haven't changed the symbol over here for some reason. The Russell, slow drift. You're right here at the 50, but your stochastics aren't in the oversold area yet. So nothing to tell you to be buying or selling the or that the small stocks are going to do anything here real soon. Mattel, no, Cheesecake. Nothing here yet either. It needs to get up through the 50 to tell us that that resistance is out of the way. Mattel, wouldn't get real excited about this chart. You can see there's really no direction to it. I wouldn't be long or short. I'd be someplace else. 3D, you can stay long as this stays above the T line. But notice you got kind of a little evening star signal, so it definitely needs to stay above the T line. Let's see, we did work, I think. Work you can be buying on a breakout tomorrow. Bulk shifter, safe bulk shippers, stay long, but if it trades back below today's low in the overbought condition, take profits. It's coming back down to test the T-line area. Monsanto. Not anything wild or exciting on this one because of its institutional trading. If you're long, you stay long. I wouldn't want to see it open lower because that would tell me they kind of run out steam and probably moving sideways for a while. As far as a longer term, yeah, you can stay long. It's just not going to produce a whole lot of profitability. Bison, stay long, but it has to open positive. If it opens lower tomorrow, see the downtrending channel is still in vogue. UHC, same scenario. This one should have been closed out today. This is a type of scenario where you close it out, you can always buy it back if it comes back up through the T-line. And that's another aspect of trading that helped me tremendously, is knowing when to get back into a position that you came out of, which is one of those ego problems that most people have. And there's very simple techniques for getting around your own ego. This one's breaking out into new territory. Google, I wouldn't trade it, but as long as Google is staying above the T-line, pretty much tells you the investor sentiment out there is still pretty good. Price line, same scenario. Not a big percentage mover, not a real great-looking chart, but as long as it stays above the T-line. It's just telling us the market's staying up. Could you explain stochastics? Stochastics are a combination of using the open, close, high, low to tell you where you are in an overall trend of a market. So you don't need to know how it works. All you really need to know is where is it occurring when you see the buy signal? Where is it occurring when you see the sell signal? The 1233 was nothing more than when I started looking at candlesticks, probably way back in the late 80s. I think it was back then. The common stochastics for candlesticks was 1455, which was a little bit too slow for me. So one night I just sat and said, all right, if I tweak my stochastics, where do they bottom out when the price bottoms out, and where do they top out when the price tops out? And because I'm a swing trader, meaning most of my trades only last 2 to 10 trading days, 1233 seems to have worked, and it works well on all time frames, whether it's 1 minute or 1 month. The bond prices, you can see kind of the bottoming action, pullback. Bonds should be heading a little bit higher, which, again, there's potential of coming back up here, which essentially says our interest rates aren't going to be doing too much as far as heading up in the near term. A breakout on AVGO, you can stay long, expecting a 45 degree. G-Pro we recommended today, but it didn't execute. You can see the fry pan bottom. You can see that we've got the T-line crunching it up through the 50. I'd still be a buyer if it came up through Friday's close and tomorrow's trading. Goog we did. Just stay long if you like this one. It's just not a big percentage mover. IIVI, that's a good looking chart. Where's your likely target? Draw a line right through the tops. That's where you're in a big trend like this and they do a consolidation, they'll usually run pretty strong right back up to the trend channel. So that's usually a good place to do a quick trade. Northern Dynasty, stay long. Nothing wrong there. Mobley came back pretty strong today. You just stay long on this one. Very simple. You stay long on this until you see a candlestick sell signal and a close below the T line. ITCI, nothing. If you're short, you stay short. You're in the oversold area, so you're a little bit more conscious of watching for the next buy signal. Be ready to cover that short position. This one, I don't know what the volume is, but it's got to have good volume at $1.50. If it opens positive tomorrow, you can be buying. That tells you the gap up today, then profit taking is over. INSY. Right now, if you're short, you stay short. You can see the bearish left-right combo. You can see the bearish engulfing. You can see there's a downtrending channel. You stay short. Just don't let it close back up above the T-line. If it does that, it tells you there's too much buying pressure here. Go on to something else. If you're long, stay long. You can see your stochastics aren't near the overbought area yet. I would suspect they're coming back up in this range, which means they're coming back up a good percentage. That's about a 50% move for the next target. Obviously, with a big percentage move, you probably want to be a little bit more nimble using your 10-minute chart. Tazar, nothing. There's just nothing there. NVIDIA has been showing a little bit of strength, but nothing to tell you there's any great buying coming in yet. So you can see there's still an upward trend bias to this one. I still want to see another strong price move to the upside, telling me that they aren't going to come back down through the T-line. BABA, stay long. You can be buying this one on positive trading tomorrow. And CTLT. You could be buying this one also on positive trading. You had your left-right combo, bullish confirmation through the 50. Just watch to see what happens once it gets to this resistance level. CVRR, you should be out of this one and not back in it until it's back up above the T-line. But here's your perfect example of, see that big move, 45 degree, you hold until when? So you see a sell signal and a close below the T-line. If you just use that very simple trading parameter, you'll sleep very well at night. Nothing major here. I'd be more apt to be ready to buy this one. Broke out through this level. And click just kind of a steady eddy. This is what I was trying to get to. Is got some charts, even though this market is moving very slowly sideways, we'll stay with the ones that are staying above the T-line. Canadian Pacific, you can stay with this. That's what you're looking for versus copper. Edward. JCP, all right. Stay short till you see a buy signal and a close above the T-line. Linear, nothing. You can see you're stuck between the two moving averages and a wedge. I'd be someplace else. 1233 is slow. And it really doesn't matter. You're using the 1233. You're using this to tell you whether you're buying in an overbought area or whether you're buying based upon an oversold area. And Cara, you just stay long until you see a sell signal. Okay, market's trading flat, but your gold stocks are still acting well. Gold's trading up a little bit after hours again tonight. So I would suspect gold is coming up here, which means some of your ETFs and gold stocks still have the capability of coming all the way back up here, kind of filling the gap over here. All right, let's call it a night. Gonna go get a hot tea to see if I can get this throat working again. So we'll see everybody bright and early tomorrow. When we do the alerts seminar again for members, I'll give everybody a heads up. All right, everybody, have a good evening. I know you feel just as bad about the Steelers losing last night as I do, so thank you.